If you invest in a stock market, right now you're probably going through a difficult time. So today I'm going to be direct, and this video is not going to be edited like usual because right now it matters more to me to tell you what I think than to spend 2 weeks making a stylish video. And since what I say is going to be really important, try to watch it until the end, please. Now, the market is going down by the second. A viewer of mine called it a market trash, as in Trump crash, and it's not really wrong. We all knew this was coming. I also knew it, and if you know my channel, since the last year I was telling everybody that this would have happened this year. But what can you do about it? What can you do now? Should you invest? Where should you invest? So this is why I'm making this video. A couple of days back, I published a video on the best growth ETFs, and among many comments there were some that said that the suggestion to invest in growth right now is not good advice. And since they're actually right in a sense, it's important for me to tell you exactly my position to avoid misunderstandings and to prevent you from losing money unnecessarily in the long term. Now, first thing, the market crash is not over. It's just the beginning. Trump imposed his tariffs last week, and now I expect the other countries to retaliate with their own tariffs, just like China did last week with 34% tariffs on US imports. It's clear now to me that we are entering a global trade war, and this can take us to a global recession. And why is that? First, prices are going to go up everywhere. So not only you're going to have that companies will reduce their revenue overseas because of the tariffs that other countries apply, but they will also struggle having a good margin in their own country because of the raw materials or manufacturing power that they get from abroad. So to have decent margins, they're going to need to raise prices, which will cause less sales. A possible long-term result, or at least this is the goal of the Trump administration, is that companies will produce more and more directly in the United States, which would increase the long-term growth of the GDP after companies overcome this difficult moment. What can also happen though is that companies instead don't react by opening factories in the United States, but instead by focusing more on international sales. So they keep manufacturing abroad, but now they also focus their marketing on those countries. And this is, for example, what Nike is going to do apparently, according to what the economist Peter Schiff wrote on X. His precise words are, Nike won't build factories in the US to make sneakers. That would add more cost than the 40% tariffs. Plus, they need to stay competitive, selling to customers in other countries that don't impose tariffs. The results will be fewer sneakers sold in the US at much higher prices. And Nike is not alone. Many retailers have high exposure to the new tariffs, above all the 34% rate for China, 32% for Indonesia, or over 40% for Vietnam, which are all manufacturing locations for retailers. Now, this would hit the American economy long term and would not be a temporary problem. That's why I believe that this year would be a difficult year, and whatever new world order will be established in the next years, countries like the US will have lower GDP for a while, and companies will have lower revenues and earnings, which will righteously bring stock prices more down. So, now let's get to the important part, which is what you can do about it now. First of all, when I publish videos where I tell you what are the best growth ETFs or the best value ETFs to invest in, it doesn't mean you have to throw all your money at them right now. I always try to remark that nobody can know exactly when the crash will have touched the bottom. When you invest during a market crash, the probability that you invest at the bottom is close to zero. So you have to expect that you invest money and probably the price keeps going down. So the feeling is always going to be, I could have waited a bit longer. The other option is to always do nothing when prices go down and wait until we get to a new bull run. But unfortunately, in the long term, this is not going to give you better returns. It just doesn't. And look guys, I totally understand the fear of entering the market now. I understand that the common feeling is to do nothing until everything is over. It was the same for me in 2022 when I was investing and the market kept going down. But in retrospect, the money invested in 2022 during the crash, even if the price kept going down, was at a better price tag than the money I invested a year before, in 2021, as well as in the 2 years after, in 2023 and 2024. Check this out. I want to show you 3 big crashes that happened in the last 10 years and why I believe that investing regularly is the best choice even this year. First of all, the crisis of 2018. The S&P 500 index went from around 2,900 in October 2018 to 2,300 in December, with a loss of around 20% in 2 months. But whenever you invested during this short crash, even if the price kept going down, it was a better moment than the last 12 months and also than all future moments. Take now 2020, 3,400 to 2,200 within a month, minus 35%. Still, investing regularly during this crash, you would have then achieved higher prices already 2 to 3 months later. But since today is different, since we know that this problem is not going to be solved in 2 months, Let's see 2022. In 2022, the price went down 27% from a peak of 4,800 in December 2021 to 3,500 in October 2022. A whole year of bear market. Now, this is a good example because I want to show you what happens if you stop investing and wait for the bottom. 2022 was the best year for me. I invested every month using dollar cost average, namely I invested the same sum every month regardless of what the market was doing. And this allowed me to buy more and more shares with the same amount of money the more the price was going down. In retrospect, my investment in 2022 were the best, even though in that period everybody was saying it was stopping investing and saving cash. But what happens exactly if you say, no, I don't invest anymore, I only hold cash and I wait for the end of the crash? Theoretically, it would be a wonderful thing. You put a lot of money aside and when the market recovers, you invest a lump sum with the lowest price possible and you can celebrate. But reality is different, above all for the average investor that cannot know exactly when the whole thing is over. First of all, there is not a moment where everything is over for good. There is not a moment in which all news and all investors say, okay, it's over, market from now on will go up and you can start investing. What happens in such crises is actually that over the months, there is going to be a series of bad and good news that bring the market up and down. Today is bad news. Maybe next month, Trump is going to announce that he will reduce the tariffs, I don't know, and the market will start going up. Then 2 months from now, something bad is going to happen again and the market falls again in a new depression. You can see it here from TradingView if you take 2022 as an example. All the moments here during the crash where you see that the price is spiking up again are periods in which news told investors that the problem was over, or that something happened that made everybody believe that the problem was over. And this always happens during crashes. Good and bad news alternate and the price goes up and down, but tendentially downwards. So why do I say that if you wait for the end of the crash, you're most likely going to lose more money? Because unfortunately, since none of us is as resourceful or patient as Warren Buffett, what actually happens usually is that you don't invest here because it goes down, and when news come out that everything is going great again, like here, you start investing heavy at this higher price. But then it goes down again because another bad news comes out and you get mad and depressed because you invested money and it's going down again. You're frustrated and you stop investing again, telling yourself that you will only invest when the crisis is over. So you miss all these good prices again until you get to this point here where again the market goes up and it looks like everything is over, and also the news online tell you it is, and you start investing here where the price again is too high. Then again something bad happens and the market goes down and now you're really frustrated. You don't want to do anything anymore. You're sick and tired of the stock market and you think it's all a scam. Then again, some months later, it goes up again. You don't have trust, so just like always, you wait to invest because you want to be sure that the crash is over. And so you keep missing all these cheap prices that the market is offering. The more the market goes up, the more you gain trust in it and you invest heavier. So you invest more and more, the more stocks are overvalued. And this goes on and on until the next crash that happened in the second half of 2023. And again, now in 2025. So what is my message? If you keep investing the same dollar amount every month, if you just do dollar cost averaging without looking at the market price, you're going to buy more shares when the prices are low and invest less when the prices are too high. This is the best thing you can do. DCA on broad market ETFs like the S&P 500 or on global ETFs like VT. And of course, growth ETFs are going to crash more and more, and they're going to be the ones that crash more because, as I always say, they are the most overvalued. So when I publish videos where I suggest growth ETFs or value ETFs, you need to understand that there is this risk. But it's also true that people always follow the market, when instead you should anticipate the market. People usually buy growth ETFs during bull markets when they're overpriced because they see that they're going great. So they're not anticipating, they are reacting. And when the market goes down, they sell their stocks at a loss and buy stuff like bonds or keep the cash instead of buying now because more and more stocks are on sale. So always try to anticipate. Now prices are going down, but you need to invest before they're overpriced again. And since we know that the crisis is far from over, it's fine to be cautious. If you still don't have the stomach, you can invest a little less. But my suggestion is still do dollar cost averaging. It might be painful at the beginning, but just waiting is going to be painful in the long term. And of course, try to buy general ETFs like VO or VTI. That's the best strategy. And only if you know what you're doing and you're ready to risk and take responsibility that the prices might be lower in the future, you can invest in other specific ETFs like QQQM or VGT. So everyone, write a comment with your thoughts about this. I'd love to hear what people think, and I'll be glad to reply to all your comments. Thanks for watching until the end. Subscribe to the channel if you haven't done it already, so that you're not gonna miss future videos. And apart from this, I wish you a great day, and I'll see you in the next video. Ciao!